It's that time of the year. The trees are turning color, the evenings are chilly, and you might be pulling on a sweater. Yep, it is property tax time. I'm Rosa Helen with Intero Real Estate, and thanks for joining me today. I've had some recent closings, and clients were confused about how property taxes are handled during a sale. Do sellers pay or do buyers pay? The answer is both, but first let's take a look at how or when property taxes are charged normally. Property taxes are calculated based on the fiscal year. The beginning of the fiscal year is July 1st and ends June 30th the next year. Property tax payments are paid in 2 installments and at about 1.25% of the purchase price of your home. 1% is the base rate and 0.25% are for additional local taxes. The first installment of property taxes are due November 1st, becomes delinquent on December 10th, in which you will incur a 10% penalty. The second installment is due February 1st, become delinquent on April 10th, and again you incur a 10% penalty. I should explain that the first installment really pays for the first half of the fiscal year, from July 1st to December 31st. The second installment pays for the second half of the fiscal year, from January 1st to June 30th the next year. With this logic, let's go over an example of a buyer who purchases a $2 million home whose closing date is November 30th, which is in the first half of the fiscal year, in which the seller owns the house from July 1st to November 29th. The buyer owns the house from November 30th to December 31st. Seller's current tax bill for the first installment is $5,000. We need to calculate how many days there are from November 30th to December 31st, which is 32 days, and prorate this amount for the buyer's portion. The remaining portion is the seller's cost. There are 184 days from July 1st to December 31, so we divide 5,000 by 184, which gives us 2717. Multiply this by 32 days, which is 869.44. This is what buyer pays for property taxes for the first half of the fiscal year. Seller pays the remainder for when he owned it up to November 30th. Now remember earlier I had said property taxes are based on your purchase price. The $5,000 that was on the seller's current tax bill was from 2005 when he last bought his house for $800,000. While the buyer pays his house today for $2 million, the county assessor has to collect the difference in property value when a property has sold. The buyer will get what is called a supplemental tax bill, which is a bill for the difference in property taxes based on the previous sale price and the current sale price. After the first year, you should get a normal tax bill that is based on what you actually purchased the home for. I hope this all makes sense. Remember, pay your property taxes before December 1st. I am Rosa Helen, wishing you all a happy Thanksgiving and good times with your loved ones.